Okay, for the record, this is Wednesday, August the 3rd, and this is 10:04 p.m. We're going to cover a lot, and I want to start by giving everyone a 30,000 foot view of kind of the markets and what's going on outside of the stock market, outside of our computer screens, to help give you a perspective on trades. Sometimes we get so laser focused on each candle that we forget about the direction where everything and everyone is looking towards. And it's important to try to, in our busy days between work and family and all the other things that come in life, um, it's still important to get a general idea of what's going on in the world because so much affects markets. And I guess starting with the Federal Reserve would probably be the first thing. I've got a small list of things that I typed up last week. Put these on the screen here. Some of this is a little outdated, but it'll give you context on what I'm referring to here. Um, Last week when the Federal Reserve released their meeting notes, the way that the system works is uh, Chairman Powell would come on later to discuss and take questions, which were, oh, I don't know if they're scripted or not. They often don't seem to be because the questions lately have been pretty upfront, pretty to the point, and not softballs, so to speak. But there is a battle, delicate dance, whatever you want to call it, that's going on behind the scenes between the administration, the Federal Reserve, Jerome Powell, which is also the other board members that often speak, and then there's Wall Street and the hedge funds, and somewhere in the middle is all of us. It's important to keep in mind that you have people's 401ks, retirement plans, even millionaires who have a lot of their money tied up with hedge funds, and these people who manage, and it's their job to make money for the wealthy or for these funds. And when they are not making money and people are watching their savings start to go down, they panic. And you can imagine the amount of phone calls that these investment firms get from everyone. Most respectable, I use that term loosely, but most funds, they're good enough, they should be good enough at what they do that they can buy a stock when it's low and anticipate where it's headed based upon valuations and revenue, and be able to see that at a certain point that stock is going to reach its peak and it will be time to take profits and sell. And they repeat this process over and over again. The time between those, the buying and selling, can be months and it can be years. Stocks like your Apples, your Microsofts, etc., because those stocks move a little bit each day, each week, each month in a predictable pattern. It has its ups and downs, and its good and its bad days, but overall, it's a very consistent type of pattern, and that will not make a person's or a teacher's retirement fund fluctuate very much to give anyone concern. And so that was the way things were and have been for at least the last 8 to 10 years until recently. It's also very important to keep in mind that you have a lot of, I wouldn't say hedge fund managers, but you've got a lot of young people working for investment firms, controlling people's money, and making a lot of the buying and selling decisions that happen in the markets. if any one of these people have been only been in the market for 8 years, they they've never been in a bull market. They don't know anything about how to handle or what to look for in a market when it's going down into a recession. Um, Depending on who you ask, we might be in a recession. We're not in a recession. Um, the consensus is we're headed lower eventually. I've seen a very select few of very seasoned traders who are extremely profitable say several over the last several weeks we have reached the bottom. Valuations have come to I've seen valuations at 3, 4, 5 earnings per share, 3 times earnings per share. I think Apple and some of the other when we hit the bottom or a bottom, I should say, one of our lowest points on the SPY, we valuations were extremely low. Even companies like Google were under 10x earnings, and we've been previously most stocks like your Netflixes at one point were trading 50 to 60 times their earnings, which is not normal. This was last year, I think, at the peak. Whereas at our low a few months ago, we were trading under 10. Typically, 10 to 20 is your average normal. That's in a very good market. But now that we're starting to see the economy contract and pull back, and when I say that, that means that people, when inflation goes up, and keep in mind, who said it best? Inflation is a monetary phenomenon, meaning that when Congress passes bills and they need more money, what you don't see is the billions of dollars every month that get paid on the interest, solely to the interest, not to anything else. Billions of dollars get paid towards the interest on the debt that's already out there. So, in order for that debt to be paid to the Federal Reserve, you have to print more money. And we're in a system, a continuous loop that is designed and has been from the very beginning. It is designed to fail. And that's a topic for another day. But because we're printing billions and trillions of dollars and have over the last several years, I think the over the last 2 years we have printed more money than all of the money printed going back to the Federal Reserve inception. Think about it, look it up. It sounds ridiculous and crazy. I couldn't believe it when I heard it either. So, with that being said, that kind of gives you the scope of how much money we have printed. And when you put too much of anything out there, everything else that was created before that, of that same and like thing, is devalued. We have so much money in circulation out there, and I don't mean the bills or the coins that we hold on to. Every time the Federal Reserve prints money, it devalues the rest of the money. So it seems in the last few months, it seemed like at one point we were almost at $20 excuse me, 20% inflation. And now that we have somewhat come down a little bit, the oil and gas coming down makes people feel like inflation is coming down, but it's really not. And the CPI data that came out was it a couple weeks ago at 9.1%, which is 30 days behind. That's a month behind. And that's moving into the next note here. The Wednesday FOMC minutes, which are 1 month behind, they show that the very few changes were done when the Federal Reserve or the FOMC meetings they put out their notes. what they'll do is they'll mark up and make changes to the previous months, the previous FOMC meeting minute notes. And based upon those changes, the market will react in a bullish or bearish manner. Sometimes it takes 24 hours for the market to digest and come to grips with all the little things that are in there and come to an agreement on how that affects the market across the US and eventually the world. So, but when these minutes came out, there there were very few changes. Jerome Powell came out almost a little bit dovish, as they say. And so because of that, the market saw that as a bullish sign, and that was the catalyst behind the rally, which is what got us to where we are now. On top of that, you take into consideration the earnings from Apple, Microsoft, Facebook, the big tech companies, more particularly Apple and Microsoft. Apple has been the golden child stock, and really whenever the rest of the market was too volatile or too risky, traders and hedge funds would shift trading and put all of their money into Apple for a day trade or for a week trade because it was consistently reliable and predictable. It didn't move too much up and down. It wasn't too volatile, and it had solid earnings, and it always has had solid earnings. Now, um, earnings, even though for a lot of companies they weren't great. Some of them weren't even good, but the market saw these earnings as not being as bad as they thought they would be. I personally thought it'd be a lot worse, but with earnings, it's really getting very much harder to predict. The Netflix a couple of quarters ago, that was an easy prediction that they were going to tank, and I was fortunate enough to buy a last minute $20 put option that turned into $1,000. That will never happen again, um, and that was mostly luck on my part, which a lot of trading is, but it really shouldn't be. You don't really Trading should be about 15 to 20% luck. The rest should be knowledge and planning and sticking to your plan, basically. So uh, the earnings not being as bad, Fed minutes not being a little bit dovish, is the catalyst, as I say here. This was the catalyst to the rally, and I want you to the whole market and everyone listens to. Whenever there's a meeting, whenever Jerome Powell is coming on, whenever you hear about a Federal Reserve board member, even prior board members, speaking somewhere, you need to listen to them because every Wall Street hangs on every word that comes out of their mouth. And at this point, looking back over the last several months, well, really over the last year, there has been a strong disliking taken to Jerome Powell over the last 8 or 9 months because I've seen a lot of people on Wall Street, a lot of people on CNBC, they've said openly that the Federal Reserve should have started raising interest rates 9 months ago, and they didn't. They kept saying that inflation is transitory when everyone knew that it wasn't. And so you have to ask yourself, if everyone else is seeing and saying this, why isn't Jerome Powell? A lot of people don't know that Powell's protege is Janet Yellen. Not protege, excuse me, his mentor is Janet Yellen. Janet Yellen has said a lot of things that turned out to be wrong as well. But that's where he's getting a lot of his information and his guidance from. Um, so Jerome Powell said that it'd be likely appropriate to slow increases at some point. He didn't say when, just at some point, and any unusually large rate hikes would be data dependent, and he had no future guidance on that. The market took that as him basically saying that he didn't see a reason to raise interest rates by 1 full point, which is what kind of spooked the market because as inflation was going higher, as um, consumers were continuing to spend money, they were contributing to the inflation. And maybe that's another thing that we should touch on real quickly here. The Federal Reserve wants people to lose their jobs. They need employment to go up. This entire process of the Federal Reserve System is it comes in 8 to 10 year cycles. 2008 was the last time that we had this situation, and it's the same thing. Right now, it's not the housing market, but if you haven't seen the movie, um, oh man, what's the name of it? Michael Burry. The movie about Michael Burry. He was telling people for the longest time that there is a massive, massive housing bubble that has occurred. The Big Short. And he was pretty much the only person that believed that the market was going to tank. And unfortunately, it took 2 years for it to happen. There was a lot of propping up behind the scenes by the government, by Moody's that rates junk bonds or rates bonds, and that's kind of getting into the weeds there a little bit. But the point is, the financial system was propped up for way too long. There was during the Bush administration, there were laws that were passed that opened up loans to lower income families, and basically what it did was it allowed banks and lending firms to accept lower income people applying for loans, and they lifted a lot of the restrictions and rules on determining whether or not an applicant is qualified for a loan. And what became of that was you had people who bought multiple houses, and they bought it under a adjustable mortgage rate, an ARM. The the rate at that time was so low that people could afford two and three houses. But when you go to the bank and you apply for a loan and they give you a loan and they let you buy another house with no money down, so all you have to pay is the mortgage payment, then people kept buying and buying and buying. And the banks and the loan officers and everyone in the mortgage industry, they made a lot of money off of it. So no one was really saying anything, and the party went on. But behind the scenes, the the interest rates were about to go up because the Federal Reserve had to raise interest rates. Inflation was getting out of control. And so once the interest rates started increasing, people couldn't afford their mortgage, and you know the rest. So, but that movie is a great, great, absolutely outstanding movie to watch because it shows you all the details on what happened, who failed, why did it fail. So, going back real quick, I don't want to trail off too much, but it's important that you understand these things because at the end of the day, people only see GameStop, AMC, um, you know, AMC to the moon, GME to the moon. They don't understand or see what that is doing to the market. They don't understand what's going on behind the scenes, and at the end of the day, they want to blame each other or they want to blame, um, you know, the YouTube pushers, or they want to blame Ken Griffin. It's important to see from 30,000 feet how things are functioning in the background because if you just take a look at what bills are being passed, where's money being spent, who's getting the money, what are they doing with it, you will start to see the fuckery that's going on all around the place. It's everybody. And if you ever want to know who benefits, follow the money. Plain and simple. So let's move on. Fed futures rate hike expectations dropped dramatically. Basically, he after he said this, it was very dovish, and the markets reacted. Fast forward to today, Nancy Pelosi got back today. When Nancy Pelosi went over to Thailand, um, the markets kind of paused for a little bit. You had China rattling, saber rattling as they call it. Based upon the language and the comments that they put out, they basically um, almost declared war against this country and threatened a national or a national of our country. Uh, but no one really stood up to them, and so it's a good thing that Nancy went over there. I don't know exactly why she went over there. Allegedly, it was planned before, but when she went over there, markets kind of paused and dipped a little bit to see what would happen. The moment she left, markets went back up. So we got another rally today. There are economic events and things in the news that are occurring that have a direct impact on almost all of the stocks that we trade every day. That's why it's important to have you don't have to just bury yourself in the economics or the data or the news, but it's absolutely imperative that you have some type of regular news source that pops up on your phone as quickly as possible when information comes across. Because if that happens and you're in a spy trade or even an options contract, and China declares war on Taiwan, you're going to know instantly why your stock has dropped by, or your account is starting to plummet, and you need to get the hell out. There have been times where I've seen news come across, and I got out just in time to save some of my profits. Other times, I've gotten out with limited loss, and then there were other times where I came back and lost it all in an options contract. So if you want to learn to trade, you got to start there. Not only does it get you used to reacting and processing information, it will keep you updated on what the hell is going on in the world, because we're in for a very rough ride going forward. When when the market contracts, people stop spending and people start losing jobs, there are millions of jobs that just some of the top 10 companies have already laid people off. And so it's important to keep a pulse on that because it's going to affect trades, most trades, not all of them. So let me move on here. I want to speak real quick on market rotation. There's a website called Finviz. I'm sure you've all heard it. Fantastic place to do due diligence. And there's a page on there where you can look at the 1 day, week, and month performance and literally see when the market rotates from one sector to another. You'll see a contraction in these categories, in these sectors, and and you'll see it start to flow into other sectors. It's good. It's good to know that. Let's see. Some of this stuff I'm just going to kind of skip past for now so we can get onto the charts. But I'll see about posting this up somewhere in an area that we can refer back to it. But a lot of these patterns, we really got to learn it. Your moving averages. We'll get into the charts here in just a minute, but a lot of these patterns and averages, indicators on these charts, absolutely imperative. It's how you predict the future. I think I got all that right there. All right, let's. Other thing I wanted to cover real quick. The Feds have been signaling here lately that the valuations are still too high. We're basically coming back up. The market makers and the hedge funds, they've all been buying up these dips to try to dollar cost average for the people that they invest the money for. For the longest time, stocks tanked, and the hedge funds stayed in their positions. They honestly thought that the Federal Reserve was going to act sooner, and as stocks kept tanking every week, they continue to stay in those positions because it's a market maker's job. They have many rules, but one of the rules is that if they're going to be a market maker, they have to move the markets in one direction or another. But they market makers provide liquidity. They provide shares. If shares, if there's a if there is a buyer for a stock, but there aren't any sellers, then there's no liquidity. That stock price will not move. And so the market makers will place shares out there on the ask or the bid and create liquidity. Otherwise, especially in times like these where everyone's afraid to get in and a lot of people have just dropped out of the market altogether, most stocks wouldn't move very much at all. And so it's the market, and the unfortunate side effect of that, of the market makers being able to add shares or provide liquidity, you also find more manipulation. Don't think for one second that hedge funds, market makers, it's almost like the guy behind the curtain. You don't know really who they are exactly, but they're manipulating things over and over and over again. And I guarantee you, we've seen what the SEC does and doesn't do. You will find that there are more than enough attorneys and more than enough money to fight the SEC with just about any major hedge fund out there. Um, and so they know what they're going to get in trouble for, what they can get away with, and they get away with a lot on a regular basis. So um, the TV show Billions, one of my favorite all-time shows. It's on Showtime. You should definitely watch it. The oil recently broke below the 200 moving average. I don't know if anyone trades oil. There's really only one ticker that I trade, and BOIL is the ticker. And it can be very lucrative under the right conditions. And let's take a look real quick at BOIL just to kind of give you an idea here. We're gonna make this trade at some point. I don't know when it's gonna be, but on the daily here, this is actually the natural gas. It follows the natural gas futures, and um, I think I over here I got into a trade when it was $80, and it moved up to $100, and I spent maybe $200 and made 1,000 in overnight. So the moves that it makes it are significant if you time it just right. And in this case, the contracts are about a month apart. So they're going to be a little bit more expensive, but the closer we get to the 19th, the cheaper they get. And so if we were buying calls here, just as an example, you really you really want to get as close to the money as possible. But most people can't afford to drop $1,200 on a smaller account. Um, if you can, that would be one of the most ideal and profitable trades that you can make. But you can see how over here on this chart it has reached, come on, reached this trend line. It basically created a second point on the trend line and is now coming back down to a previous resistance level. And it has bounced off of that. Now, it's either going to continue upward tomorrow. I'll bet you we're at what, $90, and we've got the upper trend line here almost to 100. I'll bet you tomorrow we at 8:30 natural gas inventories report comes out, and if lately we've been reporting under the supply, so which will send this up even higher, but it will likely push past that. It could even go to 110, and then it will come back down. And because oil's coming down, natural gas tends to follow a little bit behind it. Uh, we'll, I'll be looking to take a put option at some point tomorrow, probably the next day, uh, Friday, and maybe tomorrow after the close. Might be looking to take a put option because for even here in the low 60s, even though these are $200-300, you really your deltas are still very high. You don't really ever want to take an option contract with a delta under zero point zero 0.02. Don't go any higher up here because it'll likely expire worthless. You'll lose out on the trade, and if you drop $100 on a small account onto an option contract when the chances of it expiring worthless are very high, it just doesn't make sense to make that trade. So we'll be taking a look at these. As every day goes by, the theta will eat away. So on some of these contracts, let's say we did $100, you'll lose $11 a day on that contract. But if it reaches a previous resistance line or an anticipated resistance point, it'll come down. It'll get rejected pretty quick. So yeah, you could buy into this a contract at $100 and double it overnight very easily. So, but I'll be looking at that tomorrow, and it might be next week before we take any kind of trade on there. I need to watch the price action and check the news and see how everything reacts before I can get a conviction on that. Let's go back real quick. I'll come back to these IPOs in a minute, but IPOs are hot. I came across someone on Twitter. If you ever want to go on Twitter, type in a dollar sign and then the stock ticker, and it will sort it by most popular or trending. Just select the newest, most recent tweets, and you'll find that a lot of people have done a lot of due diligence for you. You can't always believe what everybody says, obviously, but a lot of people will provide the link to the SEC where you have 10K forms, 8K forms, all of the things that you need to look at to read in order to make a determination on a company if they're going to dilute their shares. There's just a lot of information that's out there that people provide, and they do a lot of charting as well. There are some fantastic folks who do charting, and they can show you pretty quickly if you want to run through tickers um, to see what their chart looks like and different entry and exit points. We'll come back to IPOs in a second here because that's what I want to end up on. I'm seeing two types of stocks that are immune, almost immune, practically immune so far to any kind of economic news. And those are going to be reverse splits and IPOs. Um, we'll come back to that here in a little bit. We've got jobless claims coming tomorrow. That's going to make a big impact on the markets, as well as non-farm payrolls. Let's see, on Friday. So depending on, if both of these numbers are negative, then we are going to see, well, I say we see, lately the markets, bad news is good news. And the, mar the markets see bad news like unemployment as good news because it means that the faster companies lay off people, this is going to sound horrible, and it is, but this is the way the markets see things. The faster people get laid off and lose jobs, the faster people will stop spending. And with limited goods out on the market, people are paying more money for those goods because they are scarce. It's supply and demand. And the COVID BS and China not producing a lot of unfortunately the things that we Americans are addicted to across the board, them not producing it is causing prices to go up even more because there's less product. So right here we're in, this is the SPY, the S&P 500, and we are coming up to the 200 moving average. We actually started to grind into it today. Let's take a look at this on the 1 hour. So we hit it, went right on that nose. Wow. And bounced right off of rejected. Tomorrow, right here at 7:30 Central, 8:30 Eastern, right in here, we're going to have the economic data. And it's important to realize, it took me a long time to accept this. You will find that markets move in certain directions and retract at certain points at exactly the right times. It's very, very interesting and strange, and it makes you think how is it possible that that the average price of 500 companies can reach a certain level at the exact same time an economic event is happening, and it does it over and over and over again. But this is where technical analysis is so important. In my opinion, there's always been for as long as I've been trading, there's always been a debate on technical analysis versus fundamental analysis. Fundamental, absolutely important. And for the most part, I would say that fundamentals of a company, how much they make, revenue, actual profits, and what are they selling? Do they have pricing power? That is absolutely important. However, when you're trading the stock price and you're making a decision as to whether or not you should enter a trade or exit a trade, when that stock price reaches a certain level or supply or a resistance or support line, I'm going to get in or out of that trade. And so it doesn't matter what the fundamental is. I guess the fundamental would be more of a long-term strategy, like your apples. But at some point, you have to look at technical analysis to some degree, especially with the moving averages, and so that's what we're going to try to look at today. I always try to keep note of max pain. Max pain is the price of the SPY or another stock, but I just look at the SPY in which the market makers will lose the most money. Or excuse me, the market makers will make money, but retail traders will lose the most. And so that's not always max pain, and those are on the expiration date. So in this particular case, it was on the 18th, I believe that was a Friday. But max pain was 390, and we closed at 388. Over here, max pain was 385. We closed right at 385. So actually, I think that's take that back. I think that was down here. We usually get within 5 points, $5 of max pain, but there for a long time we got within a few pennies, a quarter, and at the most a dollar for a long time. And it really made you wonder about how much validity that has, because it's not proven science. I'll say that, but it's enough for people to track it. So take with that what you will. Um, just to finish up here on the SPY, and then we'll take a look at other tickers. You can see that there are clearly previous resistance and support levels where the price action gets to a certain point and it just doesn't go any higher. I mean, this right here is a perfect example. This is even though this is on a 2-hour chart, and clear resistance won't push past this 416 level, but it always comes back down to test the 200 moving average, and it's things like this. When you see a price action hit that level and get rejected hard, and start to make its way back up, the moment that breaks, I tried here, tried to move past it a little bit, but once that breaks, that's an entry point. It held that level, closed above, and kept pushing higher and higher. And previous resistance point, you should take your profits in here. This is what the pros are doing. They're not. It's difficult to get these entire moves. These things are difficult to see, but just on regular price action, maybe some good news, maybe some Federal Reserve comments. Once these levels break, as long as we hold those, hold it, break, and we bounce off this previous level here and continue to, then your chances of getting in this trade and the price moving higher up to this point are very good. And most people that trade, you might not think that 407 or 408 to 416, $7. If you got a small account and you're buying the SPY, $415, that might be half of your account, and you're only going to make $7 off that trade. You don't trade SPY buying individual shares unless you have a large account. Instead, you trade options. And that move right there, depending on what option contract you buy, can easily make you thousands of dollars in one day. So, but before you can even jump in a trade, you've got a chart. So let's do that real quick. I'm going to push this up here. Let's take a look and see what you guys were looking at here. Ooh, Rivian. I was talking to my daughter about this today. Her poor brothers are 15 and they've been trading Rivian, and they've kept their head above water, but um, something told them to get out the other few months ago, and they missed it. Um, Rivian low of 1925. The best thing about Rivian is that it has Amazon backing it. That's pretty much it. We are Looks like they've passed a previous resistance level here. Let me change this. Over the over the years, my charting has evolved, and the colors and lines that I use has as well. And so I now use thick lines, solid lines, yellow lines. That's just my preference. Yellow stands out to me. Sometimes I'll make a green line to buy and a red line to sell. Um, it's an always evolving thing, but you want to use the colors and the lines to your advantage, because if I draw the absolute bottom, if I want to know the absolute bottom of a stock, I just make it bright red and it's thick. You could even change that to something else that you don't typically use, and make that your absolute bottom. So that way, if you're looking at an intraday chart and you don't pull out, most people are trading on their phones. And I will say that drawing charts, marking up charts, charting on your phone is not easy. If you have a larger phone, I've got the S22 Ultra, it's a massive screen, it's still difficult to chart. I have to use a precise pen that works very well, but it's still very difficult to chart. And it's important, unless you use TradingView, unless you subscribe to it, the free version is still really good. You just can't use as many indicators. The amount of indicators that I use in my charting, I don't pay for the monthly subscription. I think it's too much money. I can't justify spending that money. I don't care how much money I have. I don't want to spend. I can't justify spending it. So, and that's why I keep coming back to Webull. This is not a promotion. I just love how clean and crisp and clear and easy it is. And the great thing about charting on a desktop versus your phone, you have hotkeys. I can set the hotkeys for whatever I want, and hit the key or the macro on the keyboard, and then click away. I've even got macros keyed into my mouse, because when news breaks, let's say AMTD, the first thing you want to do is mark up that chart where your, lately stocks have been just rocketing off. And so, especially in pre-market. Well, on the daily chart, and that's the first thing I do is I go to the daily. I want to see where our previous resistance levels that the price action is going to get to. You'll often find that a stock will skyrocket straight up into a previous resistance level in pre-market, and you'll want to buy that stock when it shoots up there thinking that it's going to go higher. And more often than not, that will be as high as it will go, and it will just slowly come back down. And then you're stuck in a trade. I lost a lot of money trying to battle that habit. So try not to make that habit. First thing I do is I go to the daily chart and I start putting down previous support and resistance. Now, on this one here, these major dips down, these really strong dips down, this is a sign of of supplies. And when I say supply, DK Dark Knight, he'll reference the supply zones where there's a lot of trap supply. These could be, or it could just be buyers coming in. You could have a massive amount of buyers that come into to these zones where these are long wicks. And the way I mark those areas up is you can kind of see where the wick shot down, but it actually closed. It actually closed right here, the body of the candle, but that wick came all the way down. And you will find more often than not, I'll show you plenty of times here, where you'll put a support level or a line here and here. These lines are too close together. I'll come back and fix that in a second. But when you go over, you'll often see it's very close to other areas where the price shot up to or shot down to, and it stopped. So let's finish marking this up. I like this more down here in this area here. It's why I choose thicker lines, because it kind of gives me a better idea of, of just kind of looking across and seeing, okay, there's clearly strong resistance here in these areas. So that gives me more validation. Oops, shit. More validation that I'm in the right area. And I would, I'm trying to get more in the habit, but once you set these and you confirm that, yep, that's a strong resistance or support line, go ahead and just lock it. I can't tell you how many times I've been on my phone and accidentally moved a line and I don't remember where it was at. So you have to go back out to the daily. It's just a pain in the ass. So there seems to be a lot of trap supply up here. I'm sure there probably isn't here. And for our purposes, we're going to, you can clearly see one here. Now, the price action obviously is much higher up. So it might not be necessary to draw all these lines down here or all these lines. I do like to put the top line up here, and there's clearly a recent one made here. So now that we've done the daily, let's drop down to the 4-hour. How does a 4-hour look? Pretty reasonable. Okay, let's go to the 2-hour. This is where I start tightening up my lines. We're going to move this up just a little bit here. The wicks of these candles, the body is the body open here, and it closed here. These are 2-hour candles, and it reached a high up here to 1440. I don't have a candle or a line up there, so I'll go ahead and make one. And that's important because in trading, for this particular week of trading, this is a previous day high. It's an intraday high. I'll take that back. It's pre-market high, but it's a high that has significance, and traders will sell near this area. They'll probably sell in this area too because it's intraday during the trading day. The reason that's important is because a lot of traders don't mark up their candles with pre-market or after hours on. They only mark up during the day. I prefer to do it both ways because to me it still gives me another picture. There will still be other traders trading off of pre-market and afternoon candles and highs and lows. So the other thing you want to take into consideration is there are kind of zones in here. I would say, this might be a zone that I'll look at here, even though this candle is up here. If the price action's down here, and I'm either going to swing trade this or I'm considering on taking a position on it, I don't want to get out here. I'm not going to be able to get out here. Short sellers will start hammering the shit out of the price action if it's weak, if it starts showing signs of weakness and the volume starts fading out. See here, volume starts fading out. The moment that happens, if I set my price target or my take profit, if I set it here, it's not going to get filled. The chances is very, very slim. There's going to have to be some type of catalyst in the news or just a massive buyer that comes in and says, screw it, we're going to push it past this level. So I set my levels a little bit lower than where these top ticks are. Let's see here. In this case, I'd probably remove this. You can always come back later and add trading. I don't see any major resistance zones in here. There might be some in here, but to me it's pretty clear. Let's go ahead and back off here a little bit. We were on the 1 hour, so I didn't have a whole lot of information. And then at the end of the day, or what you're looking for is data, information, in order to make a decision. It sounds fundamental. It's the basics of life and decision making, and absolutely true in trading. So by backing off from the 2 hour or 1 hour to the 30 minutes, we get a little bit more information. Let's go to the 15. I like to, I think the 15, especially in stocks that have a lot of volume. Uh, I'm also I'm looking at these, the indicators, these lines. I've got VWAP. VWAP is absolute must. Always have VWAP on. I try to make VWAP a little thicker if I can. Depends on your trading platform. I always come back to Webull. I do use almost daily an app called Mumu, which sounds ridiculous. Pretty sure it's made by the same company that makes Webull. The advantage of Mumu is it gives you a lot more up-to-date news. Your news aggregate, news feed, is better than Webull. If you want to take a look at another news aggregate, Thinkorswim has the best for a free platform that you don't have to pay for. You can open a Thinkorswim TD Ameritrade account with almost nothing and get access to the Thinkorswim platform, which has a lot of great features, but the continuous news feed is outstanding. In fact, Benzinga, I don't know if y'all are familiar with Benzinga. Benzinga is a tool that I've paid for, and it's made me a crap ton of money. But it's because it you get almost instantaneous news feeds. The only thing that would probably be faster would be the Bloomberg terminal, which you have to pay a stupid amount of money for, and it's only a few seconds. There's every now and then you'll get some exclusive information that is exclusive to Bloomberg terminal, but it's way too expensive. So, um, anyways, the other great thing about Thinkorswim here that I'll try to pull this over and show you is something called volume profile. This is what volume profile looks like. This is on the Qs. Let's switch to Rivian. This shaded area here is volume over the course of the different price levels. And you can see very little volume traded here, a lot of volume traded here, and definitely a lot over here. So when you're watching the price of a stock change, go up and down, you'll see that the price moves faster when it reaches these levels where there are gaps in this volume profile, where there's very little volume traded. And that's often because on days you'll have gap ups and gap downs. And so when it makes those large moves in daily trading, uh, after hours and pre-market, there won't be a lot of volume traded in there, but there will be gaps in between there, and that's the reason why you see the shorter profile over here. But when you are, I haven't used this for very long, but in the time that I have used it, this is such a critical tool. And unfortunately, Webull doesn't have this option. Certainly not like this. That's another great thing about Thinkorswim platform. There's a lot you can do with it. There's still some things that you can't, but this volume profile has been extremely handy. Another great thing that I love about Thinkorswim here in a lot of these indicators that people have created or accumulated, you can go in here and I think it's like a Visual Basic script in your code, and you can kind of write your own indicators or make changes to any of the ones that you see. A lot of people developed a lot of things. You can go into TradingView and see a lot of those things that people have used. They offer a lot of free links to their free indicators that they've either gotten from someone else and that they've tweaked. Um, I've accumulated a lot, and I've saved them under my studies here. I've just got quite a few over the years that I've accumulated. So, anyways, um, the other automatic pivot points you see right here. This is an automatic pivot point that will draw these lines for you. Now, this is on the 5-minute chart. If I go to the 1-minute chart, it's going to look different. If I go to the 1-hour chart, it's also going to look different. So you have to keep that in mind. When you're charting, you can't, if you always looked at just a 5-minute chart, you'll miss 95. You'll miss 95% of what's going on in the markets because different stocks, traders trade differently. The algorithms, more particularly, trade. I wouldn't say differently. There is somewhat of a predictable pattern on certain things, and I wouldn't say that I can always identify a an algorithmic pattern or algorithmic trading, but when price action draws a perfect stair step on a chart, on an upward trend or a downward trend, which I've seen a few times, that's That's not traders. That is algos trading that. So let's move on to the next stock here, AMTD. Oh, I was already on there. Never mind. So let's start with HKD real quick because this is the daddy of the two. It needs no introduction. Everybody knows uh, who the stock is or what it is. I will say that it's one of the first things that I look at before I chart is the float. Always, always look at the float. The float are the amount of shares available that are out there to trade, and if there are only a few, like a lot of the floats we've been seeing lately, a few under, I would say under 50 million, but definitely 20 and under. Some of these are micro floats. Compare that stock to Apple, 16 billion shares. That's the reason why the hedge funds, most traders or a lot of traders trade Apple because it doesn't make wild swings. If if it makes this kind of a move from $160 to a $2.50 move in 15 minutes, there's a crap ton of people that are bullish on it, and especially if it breaks the previous day's high, get in that trade. Easy money right there, all the way up. I've missed a lot of trades these last couple weeks just because I've been so busy with so much stuff. But this stuff right here, bouncing, it's not a clear bounce, but it's pretty close. Let's see what the 5 minute looks like. Again, I'm going through the charts here. Let's fix this, man. And you're just looking at these lines. What are they trading off of? What is this? 21-day EMA. If you see a bounce off of it, it kind of gives you more conviction to stick with that indicator. But not every trader uses that. I can tell you on the Tesla, traders use a lot of traders, intraday traders. Let's talk about that real quick. There is a distinction that needs to be made between the traders that use the 9-day EMA and the 21 or 50 or 200-day EMA. 200 EMAs are used for long-term trades on a higher time frame. Apple got to this level here. It's also a previous resistance level, but it also crossed the 200 moving average, and and it kind of bounced off of it. It opened higher, but it closed lower. And so even though it pushed, there must have been a lot of volume that day and pushed it up pretty high, but it came back down and it continued to come down. And when it did, it bounced right off of this predictable trend level here and continued higher. So um, charts give you the ability to attempt to predict the future. Let's go back. HKD, because this set the bar for low float, and is this a recent IPO? Recent IPO stocks. You now have a hot market for IPO stocks. The criteria that we're looking for is a new IPO and a low float. A low float under 50 million, let's say, if we had to throw out a number. You got to be careful though, because if you get too low of a float, and there are some out there. What was I looking at earlier? MTC, 185,000 float. This thing, clearly, you can see how fast it moves. This is on watch actually. I'm watching this for second or third day short squeeze. Um, it's holding 200 moving average, and when I say that, it dropped down here. At close, if you get a big sell-off right before the market closes, that can be seen as not a good sign. So I wouldn't go trying to jump on this thing at market open at 3 or 4 a.m. depending on where you're at. But you can see here there are clear. Let's go ahead and draw. Oops. Let's draw. See those wicks? Strong wicks there. Strong like John Wick. Right. That's a zone that this thing is going to have to chew through in order to move higher. And let's get a little bit more specific here. If you do this enough, every chart, every single chart you look at, if you're going to look at a chart, if something's popping off, news breaks, you got to draw your lines. You have to draw support resistant lines. You got to draw your trend lines. Otherwise, you have no roadmap. You don't know where you're going, and you're just trading blindly, and you're going to lose money. So uh, that it also helps you to not feed into the FOMO, and you'll find that if a stock's popping off and you do chart, by the time you get a feel for the different areas of resistance and support and maybe where it's going, uh, it will be down 20, 30, 50%, and you will have missed out on being a bag holder. Let's see here. Let's go back to AMTD. This is one I'm watching very closely. Even though it's at 144 million, it's still got a lot of volume. 83, 84 million shares traded today. Uh, there is so far from what I'm seeing of the stocks that have been traded like this, IPOs, low floats, in the last week or two, this stock is shorted the most. Something to keep in mind, and I've been trying to find more information on HKD. If this company owned 90 something percent of the shares for HKD, then there aren't many shares out there to short. And a lot of people, it makes sense when they say, well, HKD was just a massive short squeeze over and over again. Where are the shares coming from? Now, it's possible that a fund has a good chunk of those shares. There are a lot of things that go on behind the scenes, especially with Chinese companies. And I guarantee you, China knows exactly how to manipulate our stock market, especially when all they have to do is create a company, create some shares. They know to make them low float. I'd be shocked to see any new company if the SEC allows it. There's even some issues with BABA talking about delisting, but um, most, if not all, China stocks going forward will be low float because just like with HKD, you can manipulate the price action just enough. All it takes is a new stock coming in on the market that's an IPO. This isn't a new strategy that I've thought of. People have been doing it for all the years that I've been trading, but the low floats are some of the most manipulated, and for obvious reasons because you can get massive swings and highs and lows in the price action and make profit. But I'd be surprised if China created another company with a high float because it just doesn't make sense. Now HKD, I don't know. The company was asked if there's any news. Is there any reason why the stock should be shooting up that high? They said no. They don't know why there's been so much attention towards it. But they're now valued more than JP Morgan. they're valued more than most companies out there. And they're not, their revenue earnings report's going to suck, to say the least. So, with a company valuation that high, it opens up doors for financing and many other things. I don't. I mean, as a bank, you'd have to question the legitimacy of this. But um, if you want to see something really interesting and what someone can do with the float, um, oh man, what is the Oracle of Omaha? What is Warren Buffett's company? Berkshire Hathaway. BRK. So Berkshire reached a high of $544,000 per share. Now, luckily, Warren Buffett has the knowledge, the experience, and the money to mostly back up that valuation. But the reason that that number is so high is because it's a 1.2 million float. See what I'm saying? So, not HK, AMTD. So, looking back at AMTD, this is the level. I put out an alert. I'm looking, I'd originally said 655, which would put me about right here. I would, it's going to be in this zone. Let me go ahead and draw it out real quick. It's going to be in this zone here that I'm wanting to see break or grind through. So, maybe closer to $7 because if I'm a short and I'm looking to keep this price down and short it even more, or a lot of you have to understand the psychology and the mind of short traders. They're not all like this, but this is kind of some of their fundamental concepts. A lot of short traders will get into a stock and short the shit out of it, and they'll hold on to it for days, weeks, months. And while the risk is obviously very high for holding on to that long, it takes time for traders to get discouraged or to just take their profits or trigger their stop losses. And over time, a stock will eventually grind down. Penny stocks are notorious for this, and it's one of the favorite things for traders to short are the penny stocks because they come down fast, and a lot of traders give up. It's one of the first things that traders trade when they're new to trading are the penny stocks. So you don't want to get trapped in the wrong mindset, and it's important to understand the psychology on the other side, basically of the team that's fighting against you. And so if I'm a short trader, one of the first places I'm looking at is a moving average or VWAP, or some type of previous resistance where I know there's going to be either trap supply or I know that other short traders are going to jump in. Here would be another spot just on near the $8 break. And but because of the hype, because HKD, what did they close at? Closed at 1250. Um, I don't think I can do it on this chart here, but if you overlaid HKD on the 5 minute, let's do 2 day. So you can kind of see that they kind of follow the same pattern. And now that HKD has reached a point, a crossing point here with a previous support level right around here, it's gonna have to make a decision. Again, I don't. There's such low volume. I don't see a lot of shorting in here. If there is, it's on such few shares that this is a lot of profit taking. But if you got in anywhere below here and you took profit anywhere up here, you made a lot of money. You're going to want to come back and make some more money. What I find surprising about HKD, when a stock runs like this one did, the SEC or the Nasdaq, they'll halt that stock until they can until they can contact the company and talk to them and get them on the phone, or the lawyers in most cases, and ask them what's going on. Why is this thing shooting up like this? And to my knowledge, they haven't done that. I don't know exactly what that means, but it's not going to dissuade any traders from coming back into it for a second round to make more money. And that's the reason why I'm very bullish, so to speak, on AMTD, because there's a short squeeze that's going to happen very soon. And most short squeezes in these cases will happen on the second or third day. Um, Here's the third day. So I'm anticipating once this level breaks. Um,
TK said, unfortunately, I put my bet on LCID.
oh, PK, I love you, man. Um, so I expect this to break at some point. Likely, as a trader, if I were trading this in large quantity, I would want to do most of the trading to get in and get out for the first round of trading in pre-market, because you're going to see price action move a lot more, especially up if you're bullish in this case. You're going to see it move up a lot faster, so you're going to make more money. And you're going to be looking to break very specific levels. I think this $8 is a key level, and it will probably hit quite a bit of resistance beyond this. You won't know how much because of its popularity, because of HKD, and it might move off of HKD. If we take a look at HKD here, little to nothing traded in after hours, and I don't really see, there was kind of an attempt here to push up. There was kind of an attempt here to push up. So unfortunately, we've got very limited information. Let's go ahead and change this to the 1 minute. And not a whole lot to tell us here, but you can see some buyers, very little buying, mostly selling here. Some buying came in and lifted this up. And so right now, obviously, this is stuck in a sideways channel. It's got some consolidation going on, and we will see what happens at open. This thing could easily spike up. In fact, you'll find a lot of these kind of stocks that are popular will spike up immediately at the market open and then just come right back down. And it'll grind to the side a little bit. Or this one, I'm going to go ahead and draw it now. If I had to guess, this is just a guess. I have nothing telling me this, but I'm going to draw something like that. So we'll see what happens, but that's definitely on watch. Uh, Let's see, what are some other stocks here? I'm still kind of new to this whole Discord thing, so I want to make sure I'm not missing anyone's questions. Um, let's look at, Bed Bath & Beyond. That was one. Bed Bath & Beyond, in my opinion, is a lot like GME just because of the obvious CEOs, but I believe it's my understanding that the CEO is stepping down, and I think that was news Let's see what the most recent news is on it. Bed Bath & Beyond looks to private credit market amid liquidity concerns. Is considering private loans to basically give it cash to pay its employees, to provide for inventory. I think uh, the future does not look good for Bed Bath & Beyond. I haven't been in there in a while, and here's something else that is it's very important when it comes to a company and earnings and trying to determine uh, maybe even the fundamentals as to whether or not you want to not necessarily invest in a company, but um, uh, if a company is going to continue in the future, because you really have to think about where our markets are going, the economy, because of the inflation, contraction, and all those things, the inevitable spending that's going to come to a screeching halt. In fact, right now, consumer credit debt is skyrocketing at a very alarming level. And so at some point it's going to hit a brick wall. At some point, credit card companies, you know, people are maxing out their credit cards, and that's going to come to a stop when they run out of money. They're going to default. So it's not a pretty picture going forward. If you were to walk into Bed Bath and Beyond right now, or during the day, how busy are they? Because last time I was in there, they weren't very busy. If I need anything related to bathroom, I go to Walmart or Costco or some other place. I don't go, even Target. I don't go to Bed Bath and Beyond. So um, the the float over here, 68 million. That's why you see large moves, large swings. When are they said to private loans for liquidity? So based on this news, even though it doesn't give you a good sign as to where the company's going. The moment news breaks about them securing a loan, the stock price is going to go up. And the question about do I buy the stock, do I not? And first of all, this is not this is not financial advice. I'm not a financial advisor. You should just assume that I don't know shit about anything. But whether or not to, if it were me personally, I would probably wait. You know, they say buy the rumor, sell the news. Yeah, you could do that, but there's a lot of things that can happen in between now and when they secure that loan. It's a long process. It doesn't happen overnight. It doesn't happen in a week. And here's kind of a pattern forming though. Here's a cup and handle cup. Kind of a cup and handle. Maybe not a handle forming over here, so maybe not. It's another pattern to keep your eye on. Cup and handle is probably one of the most common ones that people can easily identify. But there's a lot of things that can happen that can bring the stock back down to the 200 moving average. Let's change our time frames here and see what that 200 average looks like. This is the 4 hour. Whew. On the daily, it's a long ways away. But um, depending on how traders trade this, you might have traders looking at this and saying, yeah, I don't want to touch it until it breaks that $6 range, 650 range, previous high. There's trap supply up here. There are sellers that want to get the hell out. Let's take a look at the volume profile on Thinkorswim. $6 on the 4 hour. I have that 4 hour. Um, so there's a nice little gap here. This might be able to move pretty quickly if it got more volume coming in. Maybe you know what? That's what has made this move up in the first place. Is once it broke through this level, there's less volume, there'll be less sellers in here. So this could move up to 639, but there's still a lot less here than there is out here. So now that it's chewed through that, it's actually kind of made a cup and a handle here, and now it's starting to move up. So I would be looking for this break line over 614, and I don't know when earnings is, but there's two things you need to check for, and that's dividend. If you're in an options contract, you do not want to be in an options trade when a company releases their dividend, pays out their dividend. Because if you're holding 100 shares in that option contract, you will have to pay that dividend to the real owner of those shares. So something to keep in mind. But I would watch this. Watch for the break of 614 for a possible move higher up to a previous level, 652, 53. And the volume, what are we at here? 1 hour. Volume's picked up the last couple of days. So this might be an interesting watch. As you're watching the price action here, draw your levels. That's on 1 hour there. Let's take a look here, the 1 hour. Another thing I love about Webull, is right here, trend channel. Normally you'd spend a few minutes drawing your chart to try to figure out where's that trend level. Nope, let Webull do it for you. I just draw here. It doesn't matter where it is. Bam, automatically puts it there for you. This makes things so much easier. It saves you time. Time is money. I have not seen this on Thinkorswim. The closest thing I can find is a regression channel, but it's not very helpful. It kind of helps a little bit there, but it's not as clear and distinct, and sometimes it doesn't exactly do what I want it to do. And the great thing about this is you can shorten it up. So maybe you only care about this trend channel if it's clearly obvious that you only want to deal with this trend channel here. Back it off, expand out a little bit, get a little bit more data in here. And now you can see if you're going to enter this trade, look at this, bouncing off the 200 moving averages on the 5 minute, bouncing off and then hitting this upper trend channel. Even though it's pushing out a little bit out of it, the professional traders that are trading this stock are buying off of a lower support. And let's say at the open, if I'm on the 1 minute here, what does this stock do? Price action, boom, comes right down just a little bit past the 200 moving average, and then goes up. And right when it breaks below the pre-market high, it continues higher, way out of the channel, and then it starts to come back down. When I'm in a trade, uh, and I don't. It's very rare that I in my smaller accounts I have to hold overnight. But it's only if I get a very good entry at a low price or my conviction that it's going to continue higher. It's at some point within the next day or two at the most. Um, then that's when I'll hold overnight. But if I've got a day trade and I'm trading something like this, or Tesla moves a lot like this as well. Once once I reach up to this upper trend line, I would strongly consider taking my profit here. I'm just using this as an example. It came back down and bounced off the 21 moving average and moved back up. And so you have to, that's part of your plan. You have to decide at what point am I going to get out? And that plan might change. This is the part that comes with experience in trading is you're on a larger time frame. The plan is picking up this stock at one of its all-time low, or it's within the last 180 days or near it, in preparation or planning for expecting a push higher into earnings. That's a great strategy right now. The reason why people love earnings season. Do y'all remember Upstart? Here's a perfect example. Upstart. This stock went from Not too long ago. I've loved trading this thing. We were at 90 something dollars. A little bit before that, we were at 160. I was trading this thing like crazy in here, and then the bottom started to fall out. This is another thing that'll get you. Inverse head and shoulders. Usually, inverse head and shoulders will break through. Come straight down. This is when the market started to news started to come out about the worsening markets. We have dropped down to one point $22. But I have seen, and I'm at some point I'm probably going to jump in this again. I got a profit off of this small move here, but earnings is coming up, and so that's one of the reasons why you're seeing this. Most stocks that had high valuations or were priced high, because traders are trading into the earnings, stocks are coming up. And I've seen, I know several traders who have 10x'd on option trades on this thing because they got in down here and they loaded the boat. They knew it was coming. But if I'm trading this stock here, one of the first things I see is right here. You can clearly see that the traders were trading off of some type of trend line, a drawing line. And in charting, your points will not always be the highest the highest peak. Okay, sometimes you can get a more predictable range by doing something like this. Not off this high peak, but maybe in here. I haven't figured out exactly why that is. It doesn't happen all the time, but don't be committed to just one way of charting. You have to draw multiple lines to figure out how are other traders trading this? What are they seeing? Another reason why this trend channel thing comes in handy. And another cool thing is I can move this as well if I only want to focus on this trend or if I want to focus on this trend. Because if you're trading in anticipation for the break of this trend line, man, what an awesome entry it would have been on this day. 23 up to 30, a $7 move. If you've got 100 options contracts, I mean, let's take a look real quick. I want to quantify this for y'all. Call options. Let's see, this was on August 5th. I think there's weeklies. So let's go back to the second, when this was $23. So this has moved $7. So if we bought this now, our option contract would be $94. If we went $7 back down to 23, $600. If you bought 100 option contracts when this thing was dirt cheap back then, you'd make a lot of money. And this is why options are game changers. A lot of people are scared of options. I screwed up options left and right. I lost so much money trying to trying to understand the Greeks. You can go out there and watch 100 YouTube channels and videos of people explaining to you the Greeks, but they get so technical and so zoomed in and focused on the very specific things, which they are important, but you don't need to know the gamma and the delta and theta is important. But there are the other two Greeks are not as uh, impactful, important priority when it comes to making a decision on whether or not you're going to get into a trade like this. So, um, and this is a perfect reason why you chart. You'll find a lot of stocks, especially now. Um, going back to Bed Bath and Beyond. What do you see here? I like to use um, the trend channel for Webull for intraday trading. I feel that traders trade off of it, and I love that it draws this middle line here because clearly this middle line is resistance, and then it comes back down. And when it hits something like this, unless it didn't, here's something to think about in trading. When you're looking at candles in in this particular situation, we're in the 4 hour, but if we went to the 1 day, where did that candle close above that that mid trend line? No, it didn't close below it. So it hit resistance and came back down. So when you're making decisions on whether or not you should take profit here, um, think about the time zones in the market. This is something else that's very, very important. Every day I have an alarm that goes off at 10:25. I take that back. 8:25, 5 minutes before market open, and it's a reminder and an affirmation of whatever the strategy is that I'm utilizing that week. And I'm actually changing mine tomorrow morning. It's going to be something like IPOs. Low float IPOs are the strategy for today. And until that changes, I'll when that changes, I'll change my alarm. But 8:25, that's the affirmation because it's so easy to get distracted on the low float runner or AMC skyrocketing. And the moment that you have an external distraction, if you're like me, you'll lose focus. Uh, I don't know if people know this, but the older you get, the worse your ADHD gets. And so it's easy to get distracted these days, and trading makes that even more difficult. So at 8:25, I have that alarm, and at 10:25, I have another alarm that goes off because at 10:30, the European market closes. And the European market has, more often than not, a direct effect on US stocks. And you can look at Nvidia. Man, I can't tell you how many times Nvidia. And this was obvious to your seasoned traders, but it wasn't to me for the longest time. Boy, I got some house cleaning to do here. So let's look at 30 minutes. What happens at 10:30 here? Red candle, green candle, right here. I've seen this pattern so many times. Boom. 10:30, European market closes. It was good news. Time for a reversal. Right back up. And if you don't, and here's a perfect pattern as well. Came right up to this trap supply, previous resistance, perfect spot for a put. A lot of your Nvidias, your Teslas, the ones, the blue chips, so to speak, that have a lot of consistent high volatility, within that first 30 minutes, 15 to 30 minutes, boom, right there, is some of the most difficult times to trade uh, of the day. In the first 15 to 20 minutes, there's 10, there's 15. In 15 minutes, you went from 181 to 177. Dropped almost $3.50. That's a pretty damn big move in 15 minutes. So, and then from there, you trade all the way down to 174. And just when you think, oh, it's a red day, we're going lower, 10:30 rolls around, right back up. So, the professional traders or the traders that have or that are not bound by the PDT rule love to trade Nvidia. They love to trade Tesla. It's the volatility. They can get in And I know traders right down the street from me. There's a guy over here. He trades 15 minutes a day, and he's a swing trader. And he buys in the afternoon near close. He's got a very specific select few stocks that he trades that he knows very, very well. And within 15 minutes, he's closing out that trade. And he's done for the day. He goes to the gym and he's done after that. So um, uh, that's the difficult thing about penny stocks. I love trading penny stocks, but penny stocks are not easy to trade. I love trading intraday. I love the volatility. I really love the trading halts. We're just kind of now getting back into the trading halts. And to touch very briefly on that, when if you're lucky enough to get into a stock and it spikes up, when a when the price of a stock moves more than 5% in 5 minutes, the systems are automatically designed to halt that stock, and it's mostly for when stocks crash. The markets, even the SPY, I believe, is 15%, I think, in any given time to automatically halt trading. But if you're lucky enough to get into a stock that spikes up and goes into a halt, there is a period. Let's take a look at H. What was the stock halted today? In fact, I'll tell you exactly where. If you want to go and look and see whether or not your stock was halted. Um, you would go to NASDAQtrader.com and you will see all of the stocks that were halted. Um, there's different, the T ones are for volatility. You can see a list of the halt codes here. And let's pick one here I saw earlier. I think it was MTL. Let's take a look at MTL. I think this was halted on the way down 230 to 228. That's may have been 5%, but whew, nasty, nasty stock. Tough Built's a great stock, a great one to trade as far as volatility goes. But if let's say this one pushed up, this is on the 5 minute. Let's do the 1 minute. Let's say this stock was halted here, for example. The moment it comes out of a halt, first of all, there will be a gap up in between here. You have your first halt, the stock comes out. If it gaps up higher, that's your first clue that it's likely okay to stay in the trade. It should continue to push higher. If it comes out of that halt, gaps up, pushes higher fairly quickly, fairly soon, then you should be good to hold through the second halt. And I'm giving you the best case scenario. I've been in many halts. And when you come out of that second halt, you had better take profits because everybody else is. And there will be times where you'll take 50% profit. That's my minimum rule. If I feel like price action is starting to slow down, more people are taking profits than are buying into it, then I take 50%. I have a hotkey. Hotkeys on your keyboard, absolutely imperative. I take 50%, and then I hit that 50% hotkey again for a total of 75%. I'm locking in all of the 75% of those profits, and that way, the rest of the trade, I'm I'm using house money, so they say. But you lock in those profits. So even if that 25% goes to zero, you've still made profit. There's always a chance. HKD is the exception to the rule. Don't even use HKD. Don't even compare it to AMC, GME. That that shit never happens. I'm just going to be upfront and honest with you. Never happens. Never seen it before. A lot of other seasoned traders have been doing this a lot longer than I have. They've never seen that before. And when I say they've never seen it, they've never seen a stock move that fast on such low volume. Very, very low volume. How much did HKD trade today? Is that right? HKD? 116,000 shares? That's it? That doesn't make sense. But it's the gap downs. It's the spread in between the bid and the ask that makes that move like that. And we saw it here, and we've seen it for quite a while. So, anyways, um, coming out of the halt that second time, you better take profits. If you're lucky enough to get in that third halt, uh, you should take another 50% because what typically happens is out of that second halt, there's going to be a lot of decisions are made in a split second. And so while that stock may gap up and shoot up that first time, it's going to come back down. Typically, traders out of that second halt, if there's a lot of volume, especially if it's a previous gapper, if it's a morning gapper on the gap list, gapped up um, in pre-market, there will be a lot of attention on that. A lot of traders will want to trade that. It's a hot stock. So you might see a pullback out of that first trade, and you might see a push up and then another push up, and that will get you into the second halt. But when that come out of that second halt, it might gap up here, but it might get slammed right back down, and so you'll lose 20% because the volatility is so high, especially on a low float stock. You'll get a lot of people selling out, and if you don't take profits, if you get greedy, when you come out of that second halt, most of the time, sometimes it happens on the first halt, um, you'll get halted on the way down, and then you'll be stuck in your trade. And that's why you have to be very careful when a stock has already pushed up and there's a lot of volatility, because if it shoots up, you'll see traders. You'll be able to tell if you watch these long enough, you'll be able to tell when a stock is going to get halted. And when traders see that, they'll take that profit right then and there. 50% or however much, whatever their strategy is, their plan. And so that's what will cause the price action, the stock to drop in the red immediately, gap down out of when that green candle closes, you'll gap down immediately and you'll be stuck. You'll be holding the back. Because if you gap down and get halted on the way down, it's very, very rare that that stock reverses and comes back up. So, what else do we have here? I'm gonna check the Discord here. Um, da, da, da. Stock. Does anybody want to see or have any other stocks they want to look at? Um, oh, you know what? Just to mess with Mr. Love, we're gonna do a BBIG here. We'll look at Mullen too. For the record, BBIG was uh, it, it was not a bad idea. Um, every every time every time Johnny puts out a video, I don't to new traders, you might not see number one the preparation and two the information that he gives on these stocks, the research that this guy does. It's the reason why I'm in this Discord. This is my home. This is where I come. This is where I love to give back to you guys, to all the people. Um, I was told once that uh, knowledge that is held is knowledge that is lost. If you give your knowledge away, it will continue on forever. And so it's important that we share what we know with people. This is why I'm doing this. And I'm here in this Discord chat room because of Johnny. I got a lot of respect for the guy. He works his ass off. I don't that a lot of people don't see. I've been here. I want to. Gosh, has it been probably 6 months at least? Um, but but I love the people. The knowledge. I would recommend if you get just a few minutes, hop into the Spy Room, S&P 500 and the Spy Lounge, and in the afternoon, after say probably 1 o'clock into the close, and just watch how those guys trade. They make I've seen those guys make 50,000 in one day easily and consistently do it. It's unreal. But in order to do that, the time frame in those trades is very small. They will use up to and sometimes $250,000 of their account to trade. Big leagues for sure. And I just don't have the huevos to do that. But it's a fascinating place to see the mindset and the discussions that go on and what they're looking for. Those guys, they'll wait all day, sometimes all week, for that perfect trade, that perfect setup. When, and this is where economic data comes in. When they know Jerome Powell is coming on to speak or FOMC minutes are going to get released, these guys will wait and wait and wait for the market to fluctuate and to make massive moves up and down of traders making trades. They'll wait for the market to figure out, number one, the direction they want to go, but number two, how to interpret the data. And then once it's clear that a market has made that decision, lately it's been down, that's when they'll enter those trades. And it won't, they'll be in them for a short period of time. They'll get out with with their plan and make bank. It's really cool. I don't think most people don't realize kind of what goes on in there and in other parts as well. We've got a lot of smart guys that are trying to, we do have some everyday traders, day traders that's their job. But a lot of us run our own businesses, and so we're trying to raise a family and be good parents and good spouses and trade the markets as well. But you really got to have laser focus on what you're doing. I've tried trading during work and not had very good results. On the days where I can step away, focus on the markets, focus on the price action, that's going to be your best. Um, you're going to learn the most in those. So, BBIG real quick. If I were to, I drew a trend line from here. If I kept going with that trend line, where would I end up? If I kept going with that trend line, where would I end up? Pretty interesting. This works with SPY. You can draw your trend lines, and you'll when you pull it further out, you'll see that it'll sometimes it'll match up. That's kind of off right there, but you can see here where it almost kind of started to bounce off there. But I see another one here. Let's take a look at this. In fact, let's pull this trend line back. Looking for something obviously more current, more predictable. My headphones, I think the battery's running out here, so we're gonna have to wrap this up in a little bit. But um, get the idea. It's at this point, what's the float? 176 million. BBIG stock clears the air on the attempted hostile takeover. Not good news, unfortunately. But it's like, how much lower can it go? And in normal past market conditions, Uh, that would be your famous last words. How much lower can it go? We're talking 67 cents. But the question is, how much worse can it get? It can get a lot worse. Like, because once a stock drops below $1 on the Nasdaq, it it has I think it's 30, 90 days to increase its stock price, or it will get delisted. And I have been in one trade, very light, fortunately, where the stock was about to be delisted, and I FOMO'd and got distracted with something else, and the next day they delisted the company. Now I got a portion of those the my money back, fortunately, but it was not much. So you always have to check the news, check the markets, the economy. Um, there are plenty of live channels on YouTube, news channels that can kind of give you an idea of the markets. I think Bloomberg has a live market. So every morning I wake up and the first thing I put on is Benzinga. The pay, unfortunately, it's another expensive subscription, but you get breaking news there. It gives me an idea of futures. How are the futures looking? Which is another great thing we should take a look at real quick. The ES and the NQ, which are right here. This is going to look a little funky on this screen. When I move this over, we'll see how it looks. But I've got the ES right here, and let's put these together. Slash NQ. This is just the ticker symbol for it on Thinkorswim. Um, if your broker has futures, it might be something different. The NQ is the E-mini Nasdaq futures. The price here is 13,000. This is what the futures traded after hours overnight. Markets are always trading 24 hours a day. You just have to switch from one ticker to another. But this is the new day. We're trading in sideways action. The moment people wake up and the market opens, these tickers will directly affect the overall markets and the price action going forward. Not every the NQ will turn into the SPY, I believe. SPY up here. Uh, SPY or the SPX. Nope, that's the Nasdaq 100. Here we go. So the ES will turn into the SPY. That's why so many people trade the SPY. It's the 500 most, the S&P 500, the 500 most. Um, it's an index that takes 500 stocks and puts it in there, and that's one of the reasons why I think that Google did their stock split, because they are now included in this. Is this the Nas? I think it's the S&P 500. It's one of the ETFs, um, because Google was so volatile. They didn't want you don't want a volatile stock in the S&P 500 because it will affect it too much. Too much volatility creates unpredictability. So I think that's one of the reasons that Google did that, as it seems to be as a precondition to get into the ETF. So I don't know if anyone's ever traded Google before, but Google used to make pretty large moves depending on what the news was, and you could make thousands from 50 to 100 bucks. Um, Not always, but at the right moments, if you timed it right and you knew what was going to happen, you could make some stupid money pretty quick. Um, there's a lot more, so much more to cover here. It's one of the best things that has helped me in my trading is getting on a schedule. When I wake up in the morning, 6 a.m., I make my cup of coffee. I have my Bluetooth headset on. I immediately put on Benzinga, and I just kind of listen as I make my way to grabbing a quick snack, and get into the computer and get everything set up. And then at a certain point, I'll make myself breakfast, and I will. I've got regular feeds that I come in and the news that I start going through, and then I've got a specific set of stocks that I look at, and futures is the first thing I look at on the computer because I want to see has anything happened overnight. I know so much happens in the world when we're asleep that it directly affects our markets that you need to know that. You also need to know the economic events that are going to happen for the rest of the week. And if when Chairman Fed Powell comes on Wednesdays, or the FOMC notes meeting notes get released the day of, and sometimes the day before, you'll start to see a sell-off because traders will get out of their positions in anticipation of the possibility of bad news. Well, if you're in call options or if you're bullish in your trades, you don't want to be in a position if the Fed's going to release bad news. So the uncertainty creates a pullback in in the volume of the markets, and when people get out of their trades and sell their stocks, the stock goes down typically. And so you can anticipate that pullback in the markets prior to that. And then once the markets figure out what direction they want to go to after they digest the Fed information, you make your trades after that as well. So the there's going to be continued volatility going forward in most stocks, and you need to be prepared for in that volatility, which encompasses many scenarios. Your whatever stock you trade outside of the penny stocks. I mean, I think some of the low float penny stocks, they're always kind of in their own category because the volume that comes in pushes it up, and the shorts that short push it back down. So you'll always see large swings on the penny stocks, but on the blue chips or on your hood, on your red box, all those stocks, a lot of those things get pinned in a trading range. BBIG, perfect example. Trading range. You know, any stock out there, I don't care what it is, has a predictable pattern. You just have to pull out 30,000 feet, draw your lines, and it'll tell you what direction it will likely go. You won't always be right, and when you really zoom in and and you see it maybe bounce off here, um, if you don't have a plan and set tight stop losses or profit taking points, you're going to lose money. You have to be reasonable. These moves are not going to be massive. We went from 295 to 340. That's 45 cents. And then shortly, if you're thinking that the stock could go higher because it had a really good green day in this market, you need to assume that when a stock goes up a lot, it's got to come back. It has to come back. And in this case, it did. It went to 351, actually 346, and it came right back down and started that trend down. Now, and if you don't pull out and look at the chart, even though it gapped up, there's probably some good news here. Gapped up. Well, it didn't go very much higher, and until it comes back down. So, um, for those of you, anyone listening, anyone that might listen to this in the future, I don't know when or where I'll be able to post this. I don't want to post it on YouTube. I want to keep it inside this chat room within our group, preferably. So I'm gonna work with Johnny to try to figure that out. But if anyone ever has any questions, you're welcome to put it into the daily chatter or the stock chatter, or just send me a message directly. I'm not able to go through all of the comments and all the different categories here. It's just too time consuming for me. And so I might miss your question. Give me 24 hours to answer it. And uh, I'll try to tailor any kind of discussions or videos going forward to answer those questions. I don't know. Yeah, I often forget what it was like to be a new trader, but it really wasn't that long ago for me. So I've got a pretty good idea of some of the basic general questions, but we covered a lot. There's still a lot of holes and gaps. I know there's something else out there that I missed that is very, very key. So if you don't understand something, please don't hesitate to ask the question. Uh, no one in here will think that you're stupid or dumb or a noob. We're all still learning. I talk to traders all the time who have been doing this for 30 plus years, and they'll be the first to tell you they don't know everything. They don't know half of everything when it comes to the markets, and it's because the markets, even though they're for the most part there is a consistent, predictable pattern in a lot of things. It's an evolving machine all the time. There are new strategies that I see Wall Street market makers doing now that we're in a volatile environment. There's a lot of stocks that are stuck in a range, and while that might most people have been used to stocks just going up, now that they're stuck in this range, they don't know what to do or how to make money. But a range is a perfect place to make money. So we'll learn more about that in the coming time, the coming days. I'll do my best to help anyone that I can, and so will everybody else. These guys, Dark Knight, even Street, all these guys, Johnny, they've got a wealth of knowledge. A lot of us have more knowledge and have honed our crafts in very specific areas, but you have to take trading and talking to people and just watching people. I've watched just sat back in a Discord chat room or on YouTube. I mean, I've been in Tim Sykes' chat room years ago. All the traders out there have a very different way of trading and a different style, and they have their niche, as it's called. Um, but they're very good at that very specific thing. And if you can understand why a trader makes a trade, what criteria, what data are they absorbing and gathering prior to making that decision, that will make you a significantly better trader. But if you don't ask questions and we don't know what to teach you, then you're likely not going to learn very much. But this is the place to do it. Highly encourage you to ask questions. Um, Over time, trading is an investment. I've spent years, the equivalent to maybe a bachelor's degree at this point, learning, and I've still got a lot more to learn, but this is your future. The stock market is the easiest way if you have a system, if you're disciplined, and you're consistent, it's the easiest way to make money. It's a lot of fun too. And if one of the greatest sayings was by the Warren Buffett, Oracle of Omaha. He said the stock market is, and I'm probably not doing this justice, and but it's basically it's the place where money is transferred from the impatient to the patient. Very, very important saying. Good night, everyone. Be safe. Be good to each other. Hope to talk and see y'all again, and to let's make some money tomorrow. Don't know exactly where, but we'll see what the market brings us in the morning. Y'all take care and good night.